evening star patterns. We want to know where the stop is. The top of what, Ryan? There's a specific point, and it's a perfect lead into what we're going to talk about tonight. The top of the star candle, right? The star candle being the center of those three candles in that three candle pattern that make up the evening star. So let me ask you this. From what you know about evening stars, are evening stars bullish or bearish chart patterns? There we go. They're bearish chart patterns. Not very many people are going to debate that. People that do probably debate everything. We call them liberals. Very annoying. Anyway, when it comes to the evening star pattern, most accurately, your stop is going to be the high of that star pattern. So we do have, right now, if we wanted to make a pros and cons list or a bear and bull list, I think on that bear list, we'd have to say a confirmed evening star. Now, with what we know about evening stars, could this actually go back up and still be bearish? And I do know that everything we talk about on the videos and on Tuesday nights, as soon as the market opens tomorrow, everybody forgets about it and they play red candle, green candle game. But one day I do have hopes that we actually remember stuff. But yes, we could go up quite a bit and still be bearish. So if you're making that list of bullish arguments and bearish arguments, then we have to give a little bit of credit to our evening star. Let's stick with those bearish arguments. What do you think another bearish argument would be with the SPX? Let's take a look maybe on this weekly chart. In essence, we really had a head and shoulders pattern over here, didn't we? Just like Apple did, just like pretty much everything did. Head and shoulders, you fail the neckline, you're seeking the prior low. Well, it went to two prior lows. But it went to the last lower low, so hey, made sense a little bit. How far could this still go up and still be bearish? Could go clear back up to the neckline, couldn't it? But that weekly head and shoulders would be another really good bearish argument. Off this weekly chart, can you see another pretty bearish argument? Where's all the hammer candle clowns right now? It's a hammer candle, it's got to reverse. How about the pullback from a swing low? That swing low we failed on a Friday, a couple of Fridays ago, that made that huge gap down for us. So that pullback from the swing lows serve as resistance on the way up. Let's go back over to this daily chart. What do we see for bullish arguments? If we wanted to try to pull the bull card. How do we argue that right now? There we go. I like that one. Held support, right? Not just held support, but it held the support we had talked about. As a matter of fact, you'd have a pretty good argument to make to say, at least on this current run up, has not made a lower low, right? It already made this lower low, yes. But you could definitely eliminate a bullish argument if it fails, you know, this 1870, 1860 area, right? Because if it holds that and makes what we would call a double bottom, it could actually create one of our favorite trading patterns, right? So we could actually write that on our bull list as, you know, the current fall, no new low yet, right? No new low. Can we find more bullish arguments? I mean, you could judge a move as a series of higher highs and higher lows to where the move starts on the last lower low, which means from here all through this and down to here, we still have a higher low, right? Okay. Let's think about some other bearish arguments. Stuff that you might not even find on this chart. We're just making a list right now. Bearish arguments. We just made a little bit of bullish ones. Now let's think of some bearish ones. Stuff that'll affect this chart that might not even be on this chart. Oh, no. I'm not talking about stuff that doesn't matter. Would China? I mean, we could just simply write China on our bearish arguments, right? And everybody would know what we're talking about. What else could we write? Ronald, you're right. The Fed news. We'll actually put interest rates, question mark. Uncertainty, right? Well, Leonard, you might have to put Kramer on the bullish side because he's talking about bearish right now. So the Kramer argument might be a bullish argument. There we go, oil. Oil had another hard fall today. Who watched CNBC tonight? They actually talked about something I did not know. Something I don't follow very well. And it was in the special that followed Mad Money. Might have been why I was a couple minutes late. I was like, holy cow, Canada has entered what now? Starts with an R. Recession. Why could that be more of an impact than the fact that Russia's been in a recession? Hell, their currency's down 44%. Brazil's down 39%. Why is Canada a big deal? There we go, biggest trade partner. I personally did not realize Canada's currency had fallen 20% from the high. Canada, our biggest trade partner, is in a recession. But you know what they didn't really talk about, at least by the time I left? but they had it on their picture, their little graphic. It's our other neighbor whose currency is down 23% from its high, which also means recession. What neighbor would that be? Mexico. Okay, now let's keep on a roll with this. How many times over the past 6 months have you heard me or anybody else say that this super strong and bullish US dollar is actually scary because US companies that do business in other countries, it's going to end up hurting them? You guys ever hear something along those lines? I know I've said it hundreds of times. It's been said on every newscast. But, you know, people trade with a day trader's mentality. So if it doesn't hurt it right now today, they forget that it will in the long run. And here's the thing. What happens when countries enter recessions? What do? What did we do? What did we do back in 2009? What did we do back in 2010? And what did we do back at the end of 2011? Stimulus programs. What do stimulus programs do? They falsely prop up the market. They falsely increase the value of currency. There we go, Aaron. Good job. And if everybody else's currency is going to increase in value, doesn't it mean it's going to increase versus its value of our currency? Isn't that the only way it can increase? At least as it pertains to how we would talk about it? Is that it would actually have to increase in relation to the US dollar. That means US dollar has to come down for them to go up. Canada's already talking about implementing a stimulus. Europe's already got a pretty big stimulus program going on, don't they? And their biggest stimulus program, you'll never hear the media call it a stimulus program. It's the, oh, let's just give everything to Greece program, right? Let's just keep pumping money so everybody forgets that Greece is in shambles. And it's not just that one, it's the Ukraine. Now, today in the chat room, somebody brought up a good news topic. And I will say that I minimized it. And I didn't mean to minimize it the way I did. I minimized it for that particular company. And I did so by saying, well, the other companies in its sector are sitting completely shut down and this, that, and the other. Ronald, do you remember what piece of news that was? It was about ConocoPhillips. ConocoPhillips has announced today that they're going to lay off 10% of their global workforce. Okay. Now that's only 10%. It's not a huge number. But it did bring up, the comments I made earlier today, which were, you look at where a lot of jobs have been created. I live in Ohio right now. Pretty much any job creation has been through fracking of shale oil. Basically where they go out and go get the shale oil. That's all the jobs you'll find around here is who wants to go be on a frack team. And guess what jobs you can't find right now because they're all shut down. And now you've got the large refiners. The large refiners, because ConocoPhillips isn't just a gas station. It's a large refining company. They're laying off 10% of their global workforce. Now, every month we talk about one particular report that has a big weight on the markets. What is that report called? It's the non-farm payroll data report, aka the jobs report. Huh. If the news is big enough that it makes the news about somebody laying off 10% of their global workforce, don't you think it can have an effect on the jobs report? So right there is another thing we're going to put on our bear list, jobs report. Because if you Google things like layoffs, job minimizing, the problem is, Ryan, I think we created an issue with the low interest rate that if our market drops and they don't raise the rates, our government's going to go bankrupt. Think about it. The low to no, or the no to low interest rates are a government stimulus, meaning it costs the government. If the economy stops growing, the government is going to have a lot on its shoulders. And just an FYI, I don't think we can borrow the money from China again. I just have a funny suspicion that they don't have any to give us right now. Just going to throw that out there. I don't think they're going to let us borrow the money. What else do we got as bear arguments? What else do we have as bearish arguments? We can print the money, yes, Leonard, to report the printing of that money, which devalues the money. You know, personally, I think the home sales and consumer sentiment reports are just roll-ins to the jobs, the non-farm payroll data report, that kind of just lead into speculating on that. Let's think more violent. And no, I'm not talking about 1,000-point falls on a Monday morning. I'm talking about people dying. Yeah, I mean, we might not hear about it every day anymore, but last I checked, there is a group not just running a single country in the Middle East, but running the Middle East that are pretty violent, to say the least, right? And let's also not forget, they have now made an attack on American soil, haven't they? Now, let's kind of forget about that for a second. We got some troubles on the home front, don't we? We've literally got like a war that's been declared on police officers. Just the other day, you had police officers assassinated. Not just killed in the line of duty, assassinated. Well, that's one particular line on the chart, Leonard, yes. But we would want to put that on our bearish list as social unrest. What other bullish arguments can we think of? Let's look at what's been making any stocks go up here lately. What has made any stocks go up? Buybacks, mergers, FDA approvals. And I'm not talking like, oh my gosh, it made a green 15-minute candle. Looky here, looky here, looky here. And even that's not working. AMBA, horrible earnings tonight, dropped like 14 bucks, and GoPro's gonna buy them. Thank God I got some GoPro $40 puts. But earnings actually haven't been very good, have they? Look at the earnings since July. They have not been good. But they also haven't been terrible. We do still have companies beating their EPS estimates. And I would still put that on my bull list. Stocks beating EPS, regardless of how they're beating them. Because we know, just like some of the banks, they missed all their revenue numbers, but they beat on EPS. Pretty much every stock we hear about right now, they beat on EPS by a penny, but they missed on revenue. How does that happen? If you don't have enough money coming in, how do you do it? Oh, you cut jobs and close offices. I agree, Daryl. And Aaron, I will agree with your statement. That was actually one I was getting on. That's one I got on my list. And so we'll go ahead and touch on it now. Every time we hear Janet Yellen do her press conference on the FOMC minutes, we still hear her use the terms, we are pushing forward for our longer term inflation objective, 2.0%. Well, then how come we're at 1.4% all the time? That means they want inflation still. They want more inflation. So I will still put there, inflation still desired. But if we're going to put that on there, do we not need to look at the 9 consecutive months we've held 1.4% inflation and say that they're failing? Whatever they're doing to create inflation is not working. We've held steady for 9 months at 1.4% inflation. And that's really close to what economists say is a dangerous level, 1.3% inflation, which what they would call what? What is 1.3% inflation? Deflation. 1.3% inflation is a deflationary number. What are the facts of deflation? Economies stop. The cost of borrowing is huge. Nobody wants to do anything that costs money in a deflationary period. But believe it or not, it's actually pretty good for the monetary value of our dollar. Deflation would be counter inflation, which means our dollar would hold more value. Huh. Isn't that weird how the stock market and common sense work exactly opposite of each other? Maybe that's why 90% of people that try this fail. So if we're going to put that central banks have that desire and are still pushing towards inflation on our bullish argument list, we have to put deflation on our bear list. Why would we be wanting to make this list? Or maybe you didn't want to. Maybe I just wanted to, but why would I want to be making a list? a bear versus bull list. I'm actually reminded by something, and I know I kind of poke fun at Kramer every once in a while, but there's a reason I watch him, and I do say often that I do enjoy his analysis. But I'm reminded back in the time, seems so long ago now, during the Ebola crisis, where we were also having things with oil in Russia and all this other crap. Do you guys remember that? He actually had a show where he put this list up, and he said, until you can get rid of these things, the markets are going to fall. Now, granted, we were already halfway through the fall when he did this show. But in reality, right now, today, even regardless of the charts, we're not going to find many people that will say that China does not have an effect on our markets. Why won't they say that? Because every time they talk about the Chinese markets taking a big hit, our stocks take a dump. We're going to be hard-pressed to find people that talk about oil not having an effect on our overall economy. We're not going to find people that will argue that the jobs report and these companies that are announcing large layoffs are not going to have an effect on our economy. We're not going to find anybody that can legitimately argue that anytime there's been an act of war, markets have dropped, even though our country's just kind of pussyfooting and avoiding one right now. Nobody will argue right now that there is probably more social unrest in this country right now than there has been since the 1960s. I was not alive in the 1960s, but I can read. Who here was alive during the civil rights movement into the 60s when people were getting killed? Okay, let me ask you this. If you were alive during that time, did the images captured on television with the riots, the fires, all of that, did they resemble anything to what we've seen on TV recently? Did it bring back any memories from that? Like, oh crap, I've seen this before 50 years ago. We've been having some shootings on our college campuses. We've had this violence and we've had all this other stuff going. I don't think that I am wrong, even though I was not alive in the 60s. I do not think that I am wrong to say that there is more social unrest right now today than there has been since the 1960s. I'm not going to say it's higher than it was then, but I'm going to say there's been no other time between then and now that has been as bad as it is right now. And it just seems like everywhere you look in the world, there's nothing good. He ain't my president. I didn't vote for him. Anyway, I guess he is my president just because I live here. And things always get worse before they get better. Well, Moss, yes, in the world, but not here. There's a reason everybody else in the world wanted to come here. Because it wasn't like everywhere else. It was all rainbows and butterflies, sugar drops and gumdrops dropping from the skies. And the social unrest right now, no doubt, is huge. And our media is feeding it, aren't they? Isn't our media feeding that in many ways? I mean, newspaper articles, okay? Recent newspaper articles. Titles like, white man kills blacks in historic church. I would have read the article the same if it would have just said man kills 9 black people or 9 people in a historic church. Little things like that. We play the blame game on everything. The cloak, you know, that smoke and mirrors aspect of things being played by the media. It's like, oh, hey, everybody gets stirred up that the Supreme Court's going to allow gay marriage. More executive orders that we knew you were going to complain about if you knew that they were actually being signed. Everybody hate the gays. Everybody hate the whites. Everybody hate the rebel flag. Everybody hate this. Everybody hate that. Everybody hate this. And now we've got this completely divided up country. And quite sad. I mean, quite honestly, it's pretty sad. It's quite sad that we live in a place where, or we're living in a world where everywhere we turn around, we're actually being forced to hate somebody. Now, I'm going to ask again, can we add any more bullish arguments here? For 7 years, we've had nothing but bullish arguments that outweighed any bearish arguments we could find. But right now on our list, I've got 1, 2, 3, 4, 5 bullish arguments. It held that support. The current fall does not have a new low. We do have that weekly higher low. We do still have some stocks in the majority of the sectors beating their EPS, and the central banks are still pushing for inflation. 1, 2, 3, 4, 5. Bear arguments. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. That's a problem. And what I don't want to confuse people on, so I am going to kind of stop for a minute. I've actually been saying since last week that I believed we would revisit last week's lows and highs a few times. Several times, actually. And then I've got that one value where I'll throw that thought out the window, right? What's that one value? There we go, SPX 1800. And with one little mark that I'm about to make on my chart, we're going to revisit a trade plan that we just used not very long ago. Here's my mark for this chart. I mean, you see that box on there, what's that mean to you? That's a strangle straddle zone. That's how we mark that, that blue box. That's what we've been consistent with, strangle straddle zone. So as we prepare to make trades on our stocks, what does it mean? Okay, Coach Mike said strangle straddles, so just every second of every day buy strangles and straddles? Or what do I correlate with that to help you make the trades? And it doesn't even matter where your stock's at for the strangle straddle strategy, so long as the S&P is inside that box. But what do you do for your strangles and straddles? What are you looking for on your stocks? Support and resistance points. I want you guys to take some quick notes because so long as we're in this box, spent a lot of time this weekend and even last night kind of refining even the strangle straddle strategy that we used before. Even though ironically, it's kind of the same size zone. And I went back and I back tested several of the stocks we talk about all the time. And we're going to refine it just a little bit here. And your first line in your notes needs to say the 15-minute chart. 15-minute chart, boom. At support and resistance points, we want to straddle current week expirations. Now, there's going to be other trades you can make, by the way, but this is a fail-safe. This is what I want the novice trader following, and no matter who you are, I think that you should be primarily focusing in this way. But current week straddles on at-the-money strikes, what do I mean by that? That's kind of how we trade Apple here in the chat room, right? Apple goes to 108, and we're usually buying a 108 straddle to start ourselves out for the day. And then based on how it does, if it just falls through targets, well, we're going to keep buying puts. But if it goes back up through that area, we'll buy the call side. So, you know, we might take 108 calls and 108 puts. Or like today, we might buy a 111 straddle and then only buy 110 puts, 109 puts, 108 puts. And then towards the end, oh crap, it kind of bounced above 108, so we got to take 108 calls. So we want to straddle current week expirations. If you're looking to do your strangle trades at support and resistance points, there's a little tool we talked about last week that could help you pick how far out of the money you should be and trading the following week's expirations. What would that tool be? The ATR, Average True Range Indicator. And through my studies on it, especially in the current market situation, I still like the ATR 10 used on your 60-minute chart. Now, that does not mean at all that you trade specifically the 60-minute chart. Get your ATR value from the 60-minute chart. Now, if I'm going to look for a trade on Baidu as an out-of-the-money strangle or something, how do I use this ATR value of 1.89? To pick my strike that I want to trade. The ease of this is going to amaze you at the fact that you haven't typed an answer yet. No more than 1.89 strikes out of the money is right now proving to be your most efficient trade. Well, how do you go 1.89 strikes out of the money? You don't, do you? Which means you would trade one strike out of the money. So one strike out of the money on something like Baidu would be $2.50, right? Whereas one like Facebook, saying, you know, 1.12, so one strike out of the money might only be 50 cents out of the money. Now, in no way am I saying that you cannot produce a winning trade trading 5 out of the money. But when you actually take the time to study the data of the effect of theta plus the range it's moving in, your safest trades. I don't want to make anything sound like it is a fail-safe, no-risk trade, but your less dangerous trades are going to come in the way of picking your proper strikes. What this would mean to me is if Facebook were to bounce off of this swing high here, depending on what the price was when I got the confirmation, I would probably want to be buying 87.50 or 88 calls. Yes, they will be more expensive than $90 calls. Yes, they will have less risk than $90 calls. The cheapest is not always the best. And I would also want to use that if I'm doing the strangles. The single direction trades, you know, I'd want to use that as a multiplier for how many strikes out of the money. If I'm doing the strangle trades, I want to use it for dollars out of the money. And there is a reason for that. And the reason for wanting the dollars out of the money as opposed to strikes out of the money is if I do trade a little further out of the money, the ones that I'm right on are usually going to have more volatility, right? I'm going to have a higher profit percentage. And if I'm strangling or straddling, I'm kind of assuming that one side is going to do what? What's one side of my trade going to do? I'm going to lose 100% on it, so I need more volatility on my winning side. The one thing I'm not going to worry about if I'm trading 1 week out is going sideways. And let me tell you why. That right there is why. And what do I mean by pulling this chart up for why I'm not expecting the sideways? Do I think we could go sideways a little bit intraday at support or resistance? Yes. But if I'm trading a week out, that means I've got more than a week for it to do something. That low volume profile here is going to allow stuff to move easily, right? I'm expecting higher volatility. In this particular area, I am not expecting a lot of sideways overall, simply because the volume profile shows it should be pretty easy to move up and down. Matter of fact, there's only one other area on the chart that I would expect more volatility. Do you see where that would come? If it failed this low and came down into here. Because that's a much larger area of no volume profile, right? Now, your next line in your notes, let's write down the 60-minute chart. Because I do still believe that we should be focusing with a shorter term trading mentality. I hate to say that, but that's what I believe. And the plan's been working so far. And this is going to come to a big shock to most of you. After you write 60-minute chart, I want you to write channels. Find channels and trade the trends. But I want you to find consistent channels. I don't want you to find like, oh, I'm just going to make up a random point and hope that holds. Like we talked about the other day, I wouldn't necessarily be looking at this low from one spike down I would be looking at the consistency of something like this. Whereas if I duplicated that to a parallel line, I'm probably going to find multiple tops and bottoms to where that has hit. So use your channels on those 60-minute charts and focus on the trend. Why would we want to focus on the trend? If I'm making that a specific thing, that could also mean if it's an uptrend, don't trade the downside, right? Don't just randomly enter something. You want to look for those bottom line bounces, or if it's a downtrend, the top line bounces, right? But do you guys remember 2 weeks ago, we actually talked about some stuff with channels and how it pertains to options? And when it comes to channels and options, when is actually the best time to trade the options? Is it when it's doing the same crap over and over again in the channel? If you guys remember the webinar I'm talking about, we actually showed particularly some Apple options that when the stock made higher high and higher low on our intraday charts, the options, at best, depending on what strike we picked, made double tops and double bottoms, but most strikes actually made lower highs and lower lows, even though the stock itself on that intraday chart was making higher highs and higher lows. And if you remember that discussion, you should remember particularly what I said about when options become the most fun when trading channels. Does anybody remember when that is? And it's not when it keeps doing the same thing. It's the channel breaks. When it breaks above or below a channel that it's been trading in. I'm not saying don't trade it within the channel. If you're bored and got nothing better to do, trade it. Take the small gains. But how hard is it to set a broker alert on a channel if you're using Thinkorswim? Let's see. I got this downtrend line. I right-click it, create alert withdrawing right here, crosses above. Boom. And it'll follow that line down, no matter what value it's at. And if the stock price crosses above that, I'll get a broker alert that says it broke my channel. And if you're looking just for larger gains, focus on the channel breakpoints. There's actually a reason I'm saying that. What's one of the biggest mistakes traders make on a daily basis? You might not even know it's one of the biggest mistakes you make. And once I say it to you, you'll be like, yeah, I do that all the time. Using all your money and not having money to make trades that later present themselves. You ever done that before? Okay, it's 9:30. I have a pulse. Got to spend some money. Everything's kind of looking good. It's looking like I might have been right, but I'm going to hold through this lunchtime consolidation. Oh, crap, it's going the other way. Now I have no money to spend. Even if I sell what I got, the funds won't settle till tomorrow. Crap. But let's face it, you're also not going to sell what you got. You're going to look at it, go the other way, and go, man, I hope this comes back. Let me send Coach Mike a private message. Coach Mike, do you think this will come back? I'm holding it. I know it's down $17 and I've got calls. But do you think it'll come back tomorrow? Because they expire this week. Yeah. Not funny. Not funny. I get private messages like that. It's like getting kicked in the balls. It deflates my entire day. No doubt about it. But I want to keep things really, really simple right now. And the reason I want to keep things really, really simple right now is because I think the charts are telling us to keep it simple. So let's do a quick little review. How are we going to trade our 15-minute charts right now? And you can trade it many ways, but if you use my suggestion, and I'm not tooting my own horn or anything like that, but if you followed these last several weeks of webinars we're doing, what the charts have told me has been right. Does anybody disagree with that? Okay. And it's been right several weeks in a row to the point where if we trade what we've talked about in our Tuesday night webinar, people are making money, right? So keep the focus on what we're talking about. That 15-minute chart, how are we going to trade it? At support and resistance points, we're going to look at straddle trades that expire in the same week, strangles for the following week, where we'll use the ATR as the dollar amount to be out of the money, or single direction trades where we'll use the ATR to establish how many strikes out of the money, right? That's what your notes say? So tomorrow, if Apple starts going up and it's got an ATR 1.33 and it eclipses 108, and I was like, guys, let's not buy anything higher than the 109 calls for next week. You're like, next week? What? Huh? Yeah. And let me tell you, it's not because I don't want to make the extra money we could make on this week's options. But who else is enjoying the fact that yesterday we had 4 different puts plays on Apple that were down, 4 different calls plays, by the way, too. 3 of which, those calls, we sold for profit yesterday. And then today, all of our puts plays were up. And that's not happening on every stock that quickly. But it is happening on nearly every stock in the course of a 1-week period. And that's why I want to have that focus that way. Yeah, in reality, the 60-minute chart, we're going to almost trade like that gold trade system we've talked about a little bit. Very, very simple. I want to be 3 weeks out on that, but I want to either follow those channels, follow the trends, but where I really want to trade is when it breaks the trends. And if I'm trying to follow too many of those trends, am I going to have any money for when it breaks the trend? So here's what I want to say to you. If you have under $10,000 in your trading account, I don't want you to ever spend more than half of your money by noon. The markets are too volatile right now. You need to be able to at least do something in the afternoon part of the session. If you have under 25,000, between 10 and 25,000, I don't want more than 70% of your money spent before noon. And there's a key thing with that. First off, if you're trading options, you don't need a margin account no matter how much money's in your account. Why would you want the PDT rule, pattern day trader rule, against you when with options, the funds settle tomorrow? Why even have that 3 trade requirement? Pain in the butt, have a cash account. And even if you're over 25,000 and you can just buy, sell all you want, you're still a human being. You're not going to sell all the ones you should. do not let yourself go over 80%. I'm going to tell you why. If it ever does come down to that point of SPX 1800, the 20% of your account or more that will be used, you won't care what anything else you're currently holding does. Because it'll be an intraday move that looks like last Monday's open. I've seen it more than once. I've traded it more than once. And what I'm trying to do over these past 4 or 5 weeks now is prepare you to trade it. Because I'm telling you, unless you have traded it, you will have no clue what to do. And here's why. Our ATRs will be very, very high. We will have to pay a lot of money compared to what we normally pay for the options we trade. A lot of times people see increase in premiums and they freeze up and go, oh, shoot, I can't trade that. Right now, I don't think you need to trade a lot of those highly inflated premiums. But do you think they're going to make it easy when the crash becomes evident? Right now, it's not evident. I still personally think we have time. I still personally think we can make several little up moves. But I also know the point where I'm not going to think that like that anymore. And I also have the personal level of confidence to know that I can hit that button. SPX 1800, there is no bull about me. And I know that when it makes those drops, you're going to see options trading just like last Monday. Which ones are you talking about, Ryan? I made 143 trades today. I didn't put that many out in the chat room because people can't follow that many. But I'm still trading all the ways we're talking about now. I have one particular trading system that we've been doing over and over and over again in the chat room with Apple, that whenever I add another side or another buy to it, yes, I'll put a trailing stop on something. I really don't know what your question's implying to. I think you're trying to focus on just one thing that I'm trading and one way that I trade that one thing. I don't want you to be confused by it, but you got to remember, like for me running a chat room like this, if I'm making like alerts or putting trades out there, I've got to make sure that I'm not putting more out there than what I think people can legitimately follow. That doesn't mean that's the only trades I'm making. And I've never hid that. I won't hide that. But if I tell somebody don't spend more than half their money by noon, and I've got 26 alerts out by 10:30 a.m., chances are they forgot that fact that don't spend half their money, and they bought the first 9 alerts, and now they have no money to do anything. But for Apple, for example, I trade that with 17 different trading systems on 2 different charts. And then 11 of those trading systems I do on 2 more different charts. And I sit and trade that several times a day, 10s, 20s, hundreds of times a day. But getting back to what is relevant is the approach to take with these trades and how to protect yourself with it. And understanding that our current market condition is actually going to stay the same until what happens. In our current market condition, what I'm talking about with that is the fear, the constant, oh gosh, now it's going to crash. Everybody talking about now it's going to crash. It's going to stay the same until what happens. Something particular with that list that we made. It's until we can start crossing things off the list, right? Until I can cross off the problems with China, the unknown about our interest rates, the decline in oil, Canada's recession, Mexico's recession, the possibility that our next jobs report won't look too good. The issues in the Middle East, our social unrest here, and even those deflationary numbers. And I won't gain strength till the upside until I can not only get rid of those negatives on the bear side, but start adding things to my bullish side. But the biggest thing with all of this, and even with this whole series that we've been doing, is trying to prepare you guys for when the markets actually get really, really fun to trade, and how it's going to scare the hell out of every one of you, because you're just not going to be able to justify spending that much on an option. And you're either going to do it or you're going to miss it. And market crashes is when thousandaires become millionaires.